Hello, everyone. I'm glad to welcome you to another edition of our weekend market analysis series. In this video, we are going to be reviewing and following up on last week's trading setup on the XAUUSD chart. Now, despite the choppy market condition from last week's trading session, our main buyers leaned towards a bullish sentiment as we did capitalize on buying opportunities around the $2,302 zone thanks to the soft US economic data as you will see on this chart. And for those of you who are part of last week's trading session, you will be familiar with the structure as this was what we were looking at prior to the beginning of last week. And for the fact that price action was sitting within that robust demand zone between the 2,325 and the 2,285, and of course the above the support line of that ascending channel, we were feeling much more comfortable buying the XAUUSD as we run the momentum all the way up into the 2,340. We also joined the second half of the week with another momentum right into the 2,337 zone. For a detailed breakdown of each of our entry points, please refer to the link right in the description box below. Now, with the recent development, the overall picture remains mixed for gold traders. The unsuccessful attempt by buyers to break through that 2,335 zone throughout the course of last week shed light on the level of uncertainty in this market. While US economic data points to um, to a disinflationary trend, which is expected to lead to lower interest rates, the Fed policymakers are acting more consciously at this point. Fed Chairman Jerome Powell last week dismissed the importance of the cooler than expected consumer price index data in May, saying it was only one data point and endorsed a data dependent approach going forward. And what this simply means is that they will continue to maintain interest rate higher for an extended period of time until a convincing data comes in showing us signs that inflation has is gradually thinning out. So with this, with given the latest twist in market dynamics, how will the market interpret and react to this recent development? Will the report revealing that the People's Bank of China had stopped buying gold between the end of April and May be the decisive factor? Or will the hawkish stance from the Fed Reserve favor the US dollar? To answer these questions, we shall be leveraging our basic tools such as the economic calendar, trend lines, key levels, and chart patterns to gain a deeper understanding of the behavioral patterns of market participants and unravel the potential direction of price action in the coming week. Before we dive into the details, please note that this presentation is for educational purposes only. Remember, Forex trading carries its own inherent risk, so proceed with caution and seek advice from professional financial advisors before making any investment decisions. With that being said, let's dive right into the business. Now, our first point of contact, as usual, is going to be on the daily time frame, where we do want to be having an holistic perspective into what is going on in the market. Now, after taking into consideration the character of price action since October of last year, that's about 8 to 9 months, it is clear that the market has been very bullish. And of course, we have a couple of ascending trend line here to buttress this strength of the buyers at this point. Now, in addition to the couple of trend line here is our key level going into the new week, which is situated at the $2,335 area, a level which had played a significant role in determining the direction of price action since the beginning of the month of April. Now, if you look at the structure closely, you will see how at one point in time it had served as both buying niche and, of course, selling niche as well. Look at what happened here at the beginning of the month of May. Buying pressure resumed around this area, and throughout towards the towards the end of May, it was more of buying niche, and not until the upper Friday following the NFP data, which came in higher than expected, which led to the breakdown of that 2,335 for the first time in about 4 weeks. And since breakdown happened, you will see price action had continued to maintain selling pressure right below that structure as buyers have been finding it difficult to break through that area. Now, coupled with the ascending trend line here, you will see how beautifully both structures share a confluence at exactly the 2335 area. Now, the question going into the new week will be, will the bullish pressure continue in such a way that it will climb back above the ascending trend line and the key level at the 2335 area to incite more buying opportunities to the upside? Or will the selling pressure persist below the 2335 to incite a sell off, maybe into this second ascending trend line before another wave happens, or even break down the structure to the downside? Now, you would agree we are at a very crucial juncture, and in fact, to navigate this important confluence, I have a simple trading setup on the 4 hours time frame. Now, before we go into the 4 hours time frame, it's our practice here that we keep tabs with the fundamental factors that will be influencing the sentiment in the market this week. By monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, giving us vital information and, most importantly, timing to position ourselves for the next move. And based on the asset we are looking at, we are going to be focusing on the high impactful event from the United States economic docket. Now, the first impactful event for the coming week is coming in on Tuesday, that is June 18th, and we are looking at the retail sales data. The retail sales data is a key economic indicator that measures the total receipts of retail stores representing consumer spending in the US economy. It's an event, it's a data that is definitely going to be impacting the sentiment in the market as it provides insight into the health of the economy and consumer confidence, influencing expectations about future economic growth. Then on Friday, June 21, we are going to be looking at the S&P Global Publications on Service and Manufacturing PMI, which offers key insight into the health and performance of the service and manufacturing sector of the United States economy. So these are the high impactful event we will be looking forward to, and as technical traders we do understand that the anticipation of this event has a way of influencing the sentiment in the market, which obviously will reflect on the chart as price action. Now, talking about price action, let's scale down into the 4 hours time frame where I do have a simple trading setup to guide our trading decisions for the upcoming week. And right here on the 4 hours time frame, what I did was to take into consideration the character of price action since the beginning of the month of May. And of course, you will see here that though the market has been looking a little bit bearish, as you will see some series of lower highs after price tested that all-time high record, had a 2,450 just right here. And since that moment, price action has nosedived. And when we connected the series of lower highs, we have a couple of descending trend lines to buttress the strength of the sellers at this point. However, something interesting is going on in this market as you will see that despite the series of lower highs, we are yet to see a lower low to further emphasize the strength of the sellers. But instead, what we have here is a robust demand zone between the 2,275 and the 2,300 zone, where you will see every attempt by the sellers to break through the structure has been met with strong resistance from the buyers. And this also happened last week trading session, as you will see another buying pressure springing out from this particular area. And for the fact that price action is sitting on a strong demand zone, it makes a lot of sense for us to continue to look out for buying opportunity, except if that structure is breached and broken to the downside. Now, in addition to all of this, I'm beginning to notice the um, transition of price action into a potential reversal pattern in the form of a double bottom structure where interesting enough, the key level at the 2,335 will be serving as the neckline of that reversal pattern. And in addition to that, we also have a beautiful confluence with that descending trend line that is here. Now, you know how we use our key levels. Of course, we want to see price action break out of the key level and, of course, the descending trend line to give us an opportunity to continue the uptrend move. For me, at this juncture, I have a strong feeling that price action will continue to the upside. However, we are not going to be jumping into such conclusion. As we all know, we are within an uncertain environment as anything could actually happen. Now, should the case that buyers find it difficult to maintain or sustain the momentum above the descending trend lines, well, a breakdown of the demand zone will be a good confirmation that sellers are here to stay. So let's see how the market is going to play out around the structure at the beginning of next week. Are we going to see price break out of the neckline to inside buying opportunities? Or will this demand zone be breached and broken to the downside to incite a sell off? Trust me, I will be with you in the comment section of this video after monitoring how market participants will be reacting to this important confluence during during the early hours of the new week. If you have found this content helpful and useful in making your independent trading decisions for this coming week, I will greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me, and of course, it also helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you will always stay updated with the latest ideas I share and receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.